Fibonacci arcs are half circles that extend out from a trend line. The first and third arcs are based on the Fibonacci ratios 0.382, 38.2%, and 0.618, 61.8%, respectively, which are often rounded to 38% and 62%. The middle arc is set at 0.50 or 50%. After an advance, Fibonacci arcs are measured using a baseline that extends from trough to peak. Arcs are drawn along this line with radii that measure 0.382, 0.50 and 0.618 of the baseline. These arcs mark potential support or reversal zones to watch as prices pull back after the advance. After a decline, Fibonacci arcs are used to anticipate resistance or reversal zones for the counter-trend bounce. Calculation. Baseline. A line from point A to point B. First arc. Radius equals 0.382 of baseline. Second arc. Radius equals 0.500 of baseline. Third arc. Radius equals 0.618 of baseline. The first step is to pick the peak and trough for the baseline. Draw the line from trough to peak for an advance or from peak to trough for a decline. The example above shows Home Depot, HD, with a baseline from trough to peak. The radius for the first Fibonacci arc measures 38.2% of the baseline. The radius for the second Fibonacci arc is in the middle of the baseline, 50%. The radius for the third Fibonacci arc measures 61.8% of the baseline. 3 half circles are drawn based on these radii. Notice how HD reversed near the third Fibonacci arc, 61.8%. Fibonacci arcs add a time element to Fibonacci retracements. The Fibonacci retracements tool is based on a vertical line from trough to peak or from peak to trough. It is only concerned with the change in price. In contrast, a baseline after an advance extends from trough to peak at an angle that is dependent on elapsed time, positive slope. A baseline after a decline extends from peak to trough at an angle that is also dependent on elapsed time, negative slope. The slope and length of the line depend on changes in both price and time. A big price movement over a long period of time produces a long baseline with wide arcs. Conversely, a small price change over a short period of time produces a short baseline with narrow arcs. Chart on the screen shows Home Depot with the Fibonacci retracements tool and the Fibonacci arcs. Both indicators extend from the July low to the September high. Notice how the baseline slopes up and is longer than the vertical line in the Fibonacci retracements tool, whereas the Fibonacci retracements tool shows static retracement levels. The Fibonacci arcs show dynamic retracements that evolve over time. Fibonacci arcs drawn after a decline slowly work their way lower, which denotes falling resistance zones. Fibonacci arcs drawn after an advance slowly work their way higher, which denotes rising support zones. Despite these differences, both tools are used to anticipate support, resistance and reversals. Chart on the screen shows a stock with two Fibonacci arcs marking support. The first Fibonacci arcs extend from the February low to the May high. The stock declined rather sharply from the early May high, but reversed course in between the 50% and 62% arcs. The second Fibonacci arcs, pink, extend from the May low to the June high. This advance is shorter, so the Fibonacci arcs are not as wide. The stock moved lower in late June and early July, but found support near the 62% arc and moved sharply higher in mid-July. Chart on the screen shows a stock with a surge from March to May and then a choppy pullback. The stock bounced off the 38% arc in mid-May and then bounced off the 62% arc in early July. Even traders that missed this bounce were given a second chance with the flag pullback and breakout in early September. The chart on the screen shows stock with Fibonacci arcs drawn from the April high to the May low. The stock rebounded at the end of May and hit resistance at the 62% arc in mid-June. After stalling for a few days, the stock moved sharply lower with a long black candlestick. Resistance in the 44 to 45 area was confirmed by the May to June highs, orange box. The chart on the screen shows stock with Fibonacci arcs drawn from the May high to the July low. The stock rebounded from mid-July to mid-August, but the advance hit resistance at the 62% arc. Also, notice that a potentially bearish rising wedge formed. Even though the stock moved outside the 62% arc, this sideways move is not considered a bullish breakout. The stock traded flat for a few days and then broke support to signal a continuation of the May to June decline.